All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to go over a very simple and efficient scalping slash day trading strategy. It's really been working for me a lot. And at the end of the day, some people tend to use too many indicators. They're using 2, 3, 4, 5, even 10 indicators. And oftentimes that can provide a lot of noise. So we are going to give a summary and go over some of the key points. So that way you guys can enter into trades that look like this with your opening range high, your opening range low. You look for a break of the opening range. All right. And you can either trade the initial break, or what I often tend to prefer is looking for a break and retest of that opening range. And then you can scalp that move upwards. This is very efficient on a 5-minute chart. And if you trade options, this trade right here would have netted you about 50%, if you were able to execute on this trade in a very short amount of time. This is about 25 minutes essentially. So we're going to break down all of that in today's video. Be sure to smash the like button, subscribe to the channel if you guys are new. All right. And so what you want to do in summary is establish your opening range. So for me, this has been typically the first 15 minutes of the market. Now, if you're using a 5-minute chart candlesticks, that's going to be the first 3 candlesticks. So you're going to chart the high and the low of those 3 candlesticks. Then what you can do, as I mentioned, is you can trade the break. And so you can initially trade the first break and look to take profit along the way when you first initially break through that opening range, or you can wait for a break and retest, which is a little bit more textbook. Old support becomes new resistance if that's a breakdown, and then old resistance becomes new support if that's a breakout to the upside. Those are a little bit more textbook. And then you can set your profit targets. All right, and you want to manage your risk, all right, as always, and have your stop loss in place. And then you can rinse and repeat this strategy. We're going to break all of that down in today's video. Before we go any further, I do want to mention I started a completely free newsletter for you guys, giving out really good, valuable, free content. Okay, it's called Investment Intelligence, and not only do I give out free trade ideas such as this Tesla chart, okay, from a couple weeks ago, but I also give out just general good investment intelligence, right? Good knowledge, good things that you guys want to know and be aware of whether what's going on in the market or just for general education purposes. If you see here, this Tesla trade worked out very well. If you trade options, the returns on those were very impressive, right? So that's completely free for you guys to sign up using the link in the description or the comment section down below. I also started a Ko-Fi page. There's a link down in the description for that as well. You guys can come on here and you can request a specific YouTube video under commissions. Under there, you can also request a 30-minute session or a one-on-one session for an hour if you guys are ever interested in booking those. And if you ever enjoy the content and just feel like leaving a tip or donation, you can do that via Ko-Fi as well on the buy a coffee button there. Okay, so we're going to get into it. Before we do, as always, the content provided on this channel is for informational and educational purposes only. So please be sure to read through the disclaimer. And we'll head on over to Thinkorswim. And so you can see here what this is actually the options right here. So if we go over here to trade, and you go to your option tab, you can actually right click and copy an option contract, okay? And you can paste it into a chart. And so what we're seeing on this chart right here to the right is the actual value of these options. And you see they went from $5 right here all the way up to $7.44. So as it says here, about a 50% move in a very short period of time in 23 minutes, roughly 25 minutes. And we're going to go over how to set this up on your chart so that way you guys can figure this out for yourself here as well. Now, I mentioned, the opening range typically being your first 15 minutes. Okay, some people do the first 30 minutes. I like to do the first 15 minutes. This is all we're doing. Okay, is on a 5-minute chart, these are going to be your first 3 candlesticks. So we see that the lowest, all right, out of the first 3 candlesticks, which we'll just go ahead and highlight this right here. This is our first 3 candlesticks. We see the lowest right here is down here at 420, right? And of course, from 420, it starts getting higher. That's pretty funny right there. I didn't even notice that today. And then you have your opening range high right here. Obviously, in the 1, 2, 3, first 3 candlesticks, this was our opening range high, right over there. So now we have our opening range high. We have our opening range low. And if you're not familiar with gaps, what happened with NVIDIA today, that's the stock that we're looking at, is NVIDIA actually gapped down. So if we were to go to a daily time frame, okay, and just take a look here. This is the bottom wick of the previous day close. So that is going to be the top of our gap fill. And this is where NVIDIA opened at today. So initially, before our opening range, before we had the opening range established, all of this area right here was a gap, right? From the lowest price on the previous day close to where the stock opened today, right? Which is on a green body candlestick. This line right here represents the open. This is where we actually opened at, okay? So there was a huge gap right here and it gapped down. And obviously it ended up filling that gap back today, which is something that can happen when people get over aggressive on the shorts, right? And a lot of the shorts get squeezed out and price starts to move back up. So if we go back down to our 5-minute chart, okay, and we can come in here, and this was our whole gap, okay, and we started to see that we started to fill this gap within the first few minutes of the day, right? And we had our opening range high right here at 431.89. So we're going to go ahead and change our gap right here to 431.89. Okay, because that was the rest of the gap that was not filled after the opening range high was established. Okay, and if we zoom in here, we can see that we got a clean breakout. And as I mentioned, you could have traded this initial breakout here, okay, and scalp that opportunity. This is a quick 5-minute chart. And, if you trade options, when the stock moves $1 each case for NVIDIA or, another strike price, that's pretty significant, okay? And that's going to result in some significant gains. And NVIDIA is a stock that moves multiple dollars in a very short period of time, right? In this one 5-minute candlestick, it went from 430.66 all the way up to 435.6. So 5 strike prices essentially, $5 worth. NVIDIA, I think, actually trades in strike prices of 5, so or 2.5, right? So that's basically what we had. So it moved 2 strikes in one 5-minute candlestick. So that's a very good scalp if you're able to do that. But as we mentioned, you can see it actually does a very clean and textbook, breakout of the opening range high, and then it comes back down here, retests it, and look at where it tops out at momentarily, right at the top of our gap fill. So, this is just kind of proof that, you're seeing the buyers step in here on the retest, push up, and there's a lot of people with a take profit here at the gap fill, right? And that's evidence by the chart, by the candlesticks, right? As soon as we come there, we start to see sellers step in. Sellers are stepping in here and prices pushing down lower. All right. And it's very efficient, right? This strategy is very efficient. And as I mentioned, if this is the 10 a.m. right here, okay, and then this is the basically like the 10:25 or whatever right here, you can see that that was a very efficient trade, 50% gains, okay, in a very short amount of time. Remember, each candlestick on this chart is 5 minutes. So this is 1, 2, 3, 4, 5, 25 minutes roughly. All right, was the time for this trade. And it's a very quick scalp, very quick day trade. And, you can define your risk essentially, right? So here with the entry, all right, my stop loss right here. If we break below this support level, then, we're going to head and close the position because the break and retest most likely is failing and it could be coming back down, to continue further to the low side. And then if you look up here with your take profit, and so we put our entry right here, look at the risk to reward ratio, right? This is a very preferable and favorable risk to reward ratio. You're risking this much in the price to potentially make this much in the price. So from a risk to reward standpoint, this is also very favorable because you're not risking a 1-to-1, right? For every $1 you make, you're risking $1 to the downside. That's not the case here. You're essentially risking $2 to the downside to potentially make $6 to the upside. This is a 3-to-1 risk to reward ratio, right? So 3-to-1, meaning that if you lose 2 times, right? So if 2 times don't work out, but you win 1 time, okay, you're still going to end up, basically green here because you're going to win $3, right? And you lost $2. So ultimately, you're still net positive $1, right? And that's kind of how you want to, set these up. Of course, the risk to reward ratio is always going to be very relevant. That's part of managing your risk. And hopefully you guys enjoyed today's video. All right. This is a strategy that has really been working for me. And, we have no indicators on the chart here, just price, volume, And at the end of the day, that's really all you need. Price action is king and will really help determine, where you should be entering and exiting. And if you have indicators that you prefer, that you really like, that have been back tested and proven to help you more efficient, then feel free to use those. But this is a great example of how just price action alone in establishing an opening range high and opening range low, establishing your stop loss and your take profit before you enter into these trades, right? Can really help, change the game for you. And if you're struggling, right, finding trades, wondering how to day trade, and you feel like, you don't really know, maybe you're entering up here going long and you see it come back down and you're getting stopped out and then it goes back up again and you're just getting really confused, really frustrated. This is something that I think will help you guys out a lot.